Hi, this is Lara at Elliott Wave Forex with your free US dollar index Elliott Wave analysis for the New York trading session dated Tuesday the 15th of June. And starting this analysis, first up we'll use a historical chart today going back to 1985. Prior to this we assumed dollar was higher, 5 waves down to end cycle wave 5 in late 1992, followed by an ABC correction for cycle wave A to end in 2001, followed by a 5 wave down A, a B, a C, a zigzag wave B to end cycle wave B in early 2008, followed by, we're now in cycle wave C to the upside, followed by a 1, 2, and we're working on primary wave 3 to the upside. This is a C wave at cycle degree, and this whole structure here is an expanded flat correction. Therefore, we can reasonably expect the C wave to end significantly beyond the end of A. That's typically what they do for expanded flats. In the near term, well, mid-term, our target for the end of primary wave 3 in the first instance lies about 91.91, that's where it will equal wave 1 primary degree in length, but it's much more likely to be longer than that, and a 1.618, the length of wave 3, is reasonable, which would take the dollar up to 102.87, somewhere around here, and then we'll have 4, and then we'll have 5 to the upside, which should reach significantly beyond the end of this A. So that 1.618, the length of primary wave 3, is entirely reasonable. Taking you now to a daily chart for the last year, where this primary 2 down here is this primary 2 down here, and I have blue as minor and black as intermediate. So I have intermediate 1, 2 and 3 over, working on intermediate 4 now to the downside. Because wave 4 cannot enter into wave 1 price territory, the invalidation point in the daily chart has to be down here at 82.2. We shouldn't expect the dollar to reach below that point during this correction. Wave 4 can be it could be a zigzag, it could be a flat, a triangle, or a combination. At this stage, we can't really tell. We'll see how this wave A blue unfolds within it. So far it looks like it may be unfolding as a 5-wave structure to the downside, which could indicate either a zigzag for our 4th wave or possibly a triangle. The reason why I have this wave intermediate 1 ending here, 2 ending here, and 3 ending up here is because each wave is really nicely contained in its own parallel trend channel, and I've used drawn these channels here using Elliott's technique. I place a lot of weight on Elliott's channeling technique. It works really well. For this intermediate wave 1, a trend line from 1 to 3, first drawn and a parallel copy placed on the low of 2. We had a clean breakout to the downside of this channel, indicating that 1 was over and the next in the sequence, 2, was underway. This wave 2, ABC, nicely contained again in its own parallel trend channel. Obviously a clear breakout to the upside of this channel says that 2 is over, and then the next wave, 3, is underway. Wave 3 has now been confidently breached of its parallel channel to the downside, therefore 3 is over and 4 is underway. This channel here for intermediate wave 3 I've drawn from the low of 2 to the low of 4 and a parallel copy placed on the high of 3. Apart from a couple of very small overshoots, it really nicely contains this upwards movement. And we've got a very, very clear breach to the downside, telling us that this wave is over. I'm just going to show you an alternate wave count that says that we've only just seen the end of intermediate wave 1, and I know that this is a common wave count out there among Elliott wave analysts, and the main reason why I'm not going to go with this wave count is no matter how you draw the parallel trend channel, it just doesn't contain this movement very well. I'd put the end of minor or blue 1, 2, 3, 4 and 5 here, and we can only have 3 and 5 with a little overshoot for 5 and 2 touching it. We can't see 1 and 4 touching the channel at all. So that doesn't really make that much sense to me, unless of course possibly we moved 1 down here. That's entirely possible. And if that's the case, furthermore, there's no breach to the downside of this channel, so we could assume that intermediate wave 1 is not confirmed to be over anyway. So that's my main reason for looking at my wave count as I have. That's the main reason I have this 1, 2 and 3, because each wave is really nicely contained in its own little parallel channel. So taking you now to the hourly chart, and this is the high of my intermediate wave 3, and it looks like we had an extended third wave, and we're also looking at probably an extended fifth wave with one more push down for the dollar before we see a correction of any reasonable degree. A target to the downside for that last little push may lie about 85.2, possibly 85.63. And at that stage we should be due for a correction. This would all be wave 1 at pink degree, although I may look in the next few days at moving that up 1 degree, and this may be wave A blue for wave 4 black. I could move this all up 1 degree. When this next little push is over, we'll see a correction for a second wave or a B wave that could technically reach right up to this point here, 88.66. If we see this as a 5-wave structure for A, then this is a zigzag and B cannot reach beyond the start of A. If, however, and it's possible, we may be able to see this as an A, B, C 3-wave structure for A, which means that technically B can reach beyond the start of A. So I'll look at that in the next couple of days when we've got a little bit more of the structure to the downside. For the moment, for the next New York session, I expect the dollar to continue down towards that target, 85.63 to 85.2, before it turns around and we see a correction to the upside for a couple of days possibly. So that's all for me with your dollar analysis. If you would like analysis of the euro and or the pound, you'll find it on my site. Hope everyone's having an awesome day.